Hey, good day, everybody. Still here for the Daily Market Pulse, Monday, February 24th, 2014. So we had the stocks breaking out. They ramp up and they got a little weak late in the day, but really strength is there. Rather than showing any kind of signs of weakness and pulling back, they decided to ramp higher. So the late selling might just be, again, a little bit extended at times, but they're just seemingly at least sort of they just kind of reset themselves every few days and then they just go again. So right now there's virtually no distribution days. Everything seems to be fine. You're above resistance levels. The S&P broke out today as well. I'll show you that. Everything still seems on the long side for the most part. Go long until proven otherwise. Okay, so you're going to see what I was talking about. Essentially, you've got the Dow Jones, you see the upper shadow. So it tried to go through that level right there and then just faded a little bit. The Bollinger Bands are opening, so it's there. So it's looking to break out. Decent move. It's still a little dicey, I suppose, but the 8 moving average is crossed up and rising. Of course, the 50 is still flat, the 20 is still declining. That's why there's still a little bit of confusion. So it just needs to get a little more momentum to the upside and get the 20 get pulled up. Because when you start looking at the S&P, you had resistance across the top here, and what's going on here? Oops, there we go. So there's the green candle. You see there's the shadow. So it's trying to break out right here and it's faded right to resistance. So that's kind of the dicey part. It was broken out significantly, but it needed to close above that fairly well. Um, so it still needs to get up there. It's a little dicey, but everything still seems to be pretty decent because when you go over to the Nasdaq's still going higher. That was a clear breakout as well again today above the recent highs. Of course, fast approaching the top of the trend line, channel line as well, but you still have room to the 1272 extension. So everything still seems pretty healthy from the standpoint of the Nasdaq. The S&P and the Dow Jones, while they look decent, they're struggling perhaps to close above those key resistance levels right now. Okay, TSX may be getting a little tired here, right? So it's fairly extended. Look at the amount of air between the lows of the candles and the 8 moving average. It was extremely aggressive. When you're like not even gliding along the 8 moving average at some point, it's got to taper off. So you can see that TSX can do that. It is commodity driven, so it can definitely do that. You can see a little bit of air here, and then it pulls back, and then it held the 8 moving average and a little bit of air throughout, especially here. The more air there, and all of a sudden the pullback. Now you've got a ton of air here. So is it going to pull back to here? What's it going to do? So um, what's really nice and easy is typically it just kind of glides right along and the 8 moving average where it just holds it up and just keeps going. So let's look at the DAX. Everything seems like bullish. The TSX might be getting a little tired looking for a pullback. There's the DAX breaking out from that one original level. Made a new high today, but then faded just a little bit. Still has room to 9,800, of course. So there's still room there. Moving averages below 20 and 50 are starting to cross and rise. So that's not so bad. That's only strengthening, which means it could have room with the Bollinger Bands opening. It has room to go higher, maybe to 10,000. Um, there is the U.S. dollar, Canadian dollar. So you have the push in there Friday, then the retracement. So there's still, I thought there might be another potential test of that level above. It looks like it's got other plans, but right now it's still holding above the 8 moving average. So it's still the 8 is below the 20. That's partially creating some of that shorter term weakness. But that's a very strong bullish engulfing with another good strong thrust on Friday. So I still would anticipate there's a little bit of profit taking with another attempt to likely bounce at least halfway between here and the upside high that was established yesterday, or pardon me, Friday. That's what my inclination would be, but we'll see what it does naturally. The treasuries are just sideways. They're literally sideways. The 8, the 20 are just there. The 200 is still declining. The 50 has been lagging. That's probably the problem. The 50 is so far behind. And as it starts to catch up a little bit, maybe then it's got enough to maybe thrust higher. But right now, it's still just sideways in a chop mode for the most part, and the yen kind of the same thing, almost identical, holding support levels. Highs are declining a little bit. The 50 is flat now, so this is a little bit stronger position than the treasuries are. This might have a better opportunity to go higher. Gold higher again. At one point, I know I looked at it, it was a $13 high, so it broke out above the 1320 mark considerably. It might come back to retest it, but your goal and your target still is 1360 on the upside. Silver was lagging. It has not quite broken out of the 22 area. In fact, you see it barely did so. Now it's fading a little bit in after hours trading. So it's once again lagging what we've been known to from with gold. Well, gold has decided it was going to be ahead. It was at least 2 or 3 days ahead on the movement of what silver did, and silver caught up in a hurry. And then you got oil. Oil I thought might pull back further back toward 101 because it had plenty of air to 101. It never did. It just held. It went higher today. It made a new high. It was kind of weird. Um, and then now it's fading a little bit. So it's holding 103, 8 moving average, fast rising. The 20 is about to cross the 200. That will only strengthen the trend. I'm looking for 105 and then 108 and possibly 110 on the upside. Natural gas, we should look at that. So remember, it spiked all the way into 640, faded hard on Friday, and then holding the 50-day moving average. This could be a place to buy back in, potentially back toward 520, 530. Let's take a look at small caps, because small caps, again, being the risk on, in my opinion, becomes important. It broke out. So that's, well, of course, it's still the ultimate peak up here, right? It still has that. That was the high of today. So it's still kind of jammed between 116 and 117 currently. But Bollinger Bands are opening. Volatility has picked up after a little bit of a pullback for a few days. The 20, unfortunately, is still below the 50. The 8 is rising aggressively. The 50 is still rising. So there's still kind of a confused state, but overall, the intermediate trend is still kind of on the upside, isn't it? Because the 50 is still rising. So the strength is there. It just needs to get the 20 to start turning, and once it does that, everything gets stronger, and then it could be va-va-voom. The VIX was not doing much at one point or another. In fact, you can see after the sell-off, it looked like this in the earlier part of the day when the markets were already still about 80 to the Dow in particular, 80 to about 100 points up. The VIX looked like this, and at some point, of course, it faded hard, but it went to the low, which is not much lower than what it was on Thursday. So it wasn't really declining hard and fast, despite the markets being in triple-digit numbers on the Dow and the Dow futures. So it was a little weird. And then, of course, now you can see that little bit of a shadow now as the markets faded a little bit. So it's a little weird here. It's holding on for now. Markets, I said, look bullish for the time being, but anything can happen. That's why there's reversal candles. It can happen literally overnight. So anyway, we'll see what happens here. Right now, I still long everything for the most part, but watching these levels pretty closely.